Welcome. In this video is Zbcn coin fallover. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. There's an important development that draws attention on the chart. When the price movements are analyzed, it is seen that the market has broken through a certain resistance level and formed a new high peak, especially with the upward momentum recorded recently. The occurrence of this high top is an extremely positive development in terms of technical analysis. This is because the formation of a higher high in the markets usually indicates that there is buying interest and that the price has caught up with the upward momentum. Such price structures herald periods of investor confidence, market strength, and buyers starting to break the selling pressure. After the price has made this new high, all eyes are now on where a possible new bottom will form. This is because trend formation, one of the most important building blocks in technical analysis, is confirmed not only by a higher high but also by a higher low that follows it. If the price retraces to a certain extent after the new high, finds support again at a point above the previous low, and then bounces off it and starts to rise again, then a structure defined as a rising bottom emerges, and this is technically considered a strong signal of a trend reversal. Looking at the current situation, the fact that the price has exhibited a strong momentum by rising above the previous peak level shows that the seeds of an upward trend have been sown. In order for this uptrend to become permanent and continue stronger, the price needs to make a higher low in the coming period. Such structures represent the transition of the market structure from a falling top, falling bottom, to a rising top, rising bottom structure. And it is precisely this stage that marks the beginning of a trend change in the market. Traders usually wait patiently for a high high followed by a high low in order to catch these transitions. This is because such patterns can herald not only a short-term uptrend, but also a stronger bull trend that can last in the medium to long term. It is also important that the price makes an orderly and controlled retracement to a new low, without panic. This indicates that investor confidence is growing and selling is limited. If the price reacts in the coming days from a point above the previous low and makes an upward move from this area again, it will be possible to talk about a clear uptrend. Such technical developments allow traders to make clearer decisions, because the market is no longer indecisive or horizontal, but starts to follow a clear direction. The rising high and rising low structure acts as a guide in technical analysis and means that many investors increase their buying positions. An important point to note at this point is the levels at which the price receives support during the formation of this structure. Reactions, especially from bullish areas, indicate that the price is on solid ground and that upward movements are more sustainable. If the price hits a strong support zone and finds buyers there, and then starts targeting a new high, this scenario becomes stronger. It is important to remember that market movements are shaped not only by news flow, but also by the technical structures created by investor psychology. In the current situation, the high that the price has made has given investors hope and a psychologically positive mood. If the price forms a new support and turns up from that level, it has the potential to start a much stronger buying wave. In summary, this new high and possible high low on the chart points to a very important turning point in terms of technical analysis. But we can't decide the analysis with this alone. Let's look at other metrics. Stay tuned. One of the important technical formations on the chart is a potentially developing W pattern structure. This pattern is one of the structures that are considered highly reliable in classical technical analysis and symbolize the possibility of a turnaround. The formation of such patterns, especially after prolonged declines, raises positive expectations among market participants. The W pattern is often considered as one of the strong signals of a search for a bottom and the subsequent recovery. Looking at the price action at the moment, the first bottom has formed on the chart. This initial decline and subsequent rebound is an important indicator that the market is trying to shake off the selling pressure and is slowly searching for balance. However, in order for this pattern to be completed and gain strength, the price is expected to retreat again after a while to form a second bottom. This second bottom is usually close to the level of the first bottom, and if an upside breakout occurs with a strong reaction from this level, the pattern is considered complete. The psychological impact of the W pattern is also extremely important. This is because this pattern symbolizes the end of a downturn in the market and a period when investors start to buy again. Especially when the second bottom is formed, investors expect an upward movement from here. And if this expectation is supported by volume, a strong uptrend begins. So if the price finds enough support at these levels, and the upper boundary of the pattern is broken as buyers become dominant, an aggressive rally is usually possible. Currently, the price seems to have completed the first leg of this potential structure. The price action rebounded from the initial bottom, and may have moved up to an important technical resistance level. However, at this point, due to profit selling or market dynamics, it is quite normal for the price to make a downward correction and form a second bottom. The important thing is that this second bottom is formed at a level close to the first bottom without breaking the first bottom extremely low. This indicates that the formation of the double bottom pattern in the market is complete and the W pattern is about to be confirmed. If, after the second bottom, the price starts an upward movement again and the top of the first rebound wave is broken, this means that the W pattern is now complete and the pattern target has become active. From this point on, an upside target is usually set at the height of the pattern. That is the distance between the two bottoms. This target often allows the price to reach a new equilibrium level in the short to medium term. For market participants, the formation of such patterns requires patience. However, the uptrends that result from this patience are often satisfying. This is because W patterns usually represent the end of a downtrend and the beginning of an uptrend. In order for this pattern to work successfully, the price should move within a certain equilibrium within the pattern, should not break down too sharply, and should receive strong reactions, especially from the second bottom. It is also important that volumes increase at the second bottom for this pattern to work properly. Increased volume indicates that buyers are re-entering the market and the pattern is strongly supported. If these conditions are met, the upward movement of the price may not only be limited to the target of the pattern, the first steps of a longer-term uptrend may also be taken. Analyzing the situation on the chart right now, we can see that the first phase of the W pattern, the first bottom, has been completed. It would be quite healthy and natural for the price to pull back again to form a second bottom. If the price holds its support levels during this pullback and shows an upward reaction from the second bottom, a strong bullish expectation will be technically supported. The MACD indicator is a powerful tool that is most often used in technical analysis and helps to assess the momentum behind price movements. This indicator, which provides important signals to investors, especially in determining the direction of the markets, is very useful in measuring the strength and continuity of the current trend. When we look at the current chart, the MACD lines are pointing upwards, indicating the presence of a positive momentum. However, if these lines climb further upwards, it is quite possible that this positive trend will be further strengthened and the price will exhibit an upward movement in parallel. The MACD has two main components, the MACD line and the signal line. The position of these two lines in relation to each other and the way they move give important clues about the future direction of the price. In the current situation, the MACD line is above the signal line and trending upwards. This is usually a harbinger of an uptrend. However, when the lines move further upwards, that is the difference between them increases. It signals that the market momentum is getting stronger and the uptrend is built on solid foundations. In particular, a bullish breakout above the zero line supports a stronger bull market outlook. MACD lines are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.